Good day, everyone. Well, we've got a market that continues to uptrend, and some would say that it's getting a bit ahead of itself. It's getting a bit extended from its 10-day moving average. So some kind of consolidation wouldn't be too surprising. And someone pointed out the last time it did this was in 1995 when the Republicans took over Congress for the first time in 40 years. And as we all know, or may remember, 1995 was one of the strongest, I think it probably was the strongest year on record in terms of the uptrend that was generated. It was extremely clean, without really, I think, any major corrections. So that was probably one of the most profitable years on record, in addition to, of course, 1999. But so we have a situation where the market doesn't seem to want to go lower. So far, leading stocks seem to be acting okay. Our focus list continues to grow, and various industry groups continue to maintain some semblance of strength. Just the other day, we had financials lead the way. XLF is the ETF, financial ETF. And it had been trading sideways, much like some of these other indices, like the S&P 500, and then it broke out to the upside. We also see that action in, like I said, that the Dow is quite pronounced in when it finally broke through 20. It took 2 stabs to really break through, and now it's right around 20,550. So that's looking all right. As I said, a number of stocks on our focus list deserves some comment. I mentioned QTNA that had this pullback on lower volume yesterday, and then today the volume rate is minus 13%. So at this rate, it'll be less than yesterday's volume. So that suggests that it might be trying to find some sort of floor here right around the 10-day moving average. I also mentioned that this is, as you can see, the erratic nature of this pattern really lends one to want to sell this in the strength. So, for instance, I think we mentioned this in early in the year, and this, of course, it had 3 huge days up, so that's kind of a no-brainer to start taking your profits. If you like selling on weakness, you could wait to the 4th day where it's down, and that would have been on the 9th of January. And then more recently, 2 strong up days, and again, you're launching from 20 all the way up to 23, almost 23. That's almost a 15% gain. Depending on where you bought it, it could be 10%, but 10% gain in 2 days, that's pretty good, especially in these kinds of markets. We've got NVDA, NVIDIA. Mentioned that one.
It's trying to find short, I think, Dr. K.
Yeah, I was gonna say that. Well, today it pierced the 50-day, and the volume right now is 13% above average. So it's moderate volume, and this pattern that formed starting in late December may be a major top for this stock. I mean, it's had a really good run, and the question is whether it can really form a base from the current situation. Right now, it looks like there's enough buying interest that it dips below the 50. And if you look at actually the whole run higher, I think you have to go back to where it just dipped pennies below the 50-day. Today, it was a little more pronounced. So this is really the first time in its entire run that it's pierced the 50-day to this level. So that could also be a clue that there's going to be more selling interest in the stock going forward. So yeah, it could easily morph into a short of some sort.
Yeah, I think you get the support at the 50-day line is pretty obvious. So what I would be watching for here, I was actually looking for a rally up into the 20-day yesterday. I actually shorted it yesterday, and then this morning I had some and I covered it on the breach of the 50-day moving average, because that will generate sort of an auto response in terms of buying, and then the question becomes whether it can sustain. So you're saying, what's the volume level right now? It's running below average, right?
Above average, 12%, which is a cause for concern because
Down.
you know what it does today. I mean, if it's going to bounce and there's good buying volume coming in, well, that's great. Even though this is the first time in its run that it's pierced the 50-day by what, 1 or 2%.
Yeah, I mean, if you're looking at the 620 chart, you got a buy signal down here, so you can see pretty easily if you're shorting it this morning and you see the MACD stretching and then crossing down here at the bottom, then you cover it. I actually took my profits there, and now I'd be watching this for some sort of a failure, which wouldn't surprise me. So if you look at the growth rate in this thing, it slows down sharply to, like, I think 14% or something like that next year. You can check those estimates, Dr. K, but it looks to me like it is slowing down. So, you know, I know some people, I've seen some people on Twitter talking about this being the next Cisco. I don't think so. I think it's probably going to top here and come in and at least build a base of 30%, 35%, so it could create at least a shorting opportunity. So I'm sort of watching that. Well, I am watching this closely now that I covered. So anyways,
so yeah, the next stock I want to mention actually was SQ, and we mentioned that this had a high volume reversal about a week ago, and it's an high volume outside reversal, so that is a fairly bearish pattern, and sure enough it pierced the 50-day the very next day and then went lower by the third day. So right now it's struggling, I guess, trying to regain its 50-day. The volume rate's pretty good. It's about 62% right now. But this is the kind of stock where, you know, when I see a high volume outside reversal, I will generally keep my stocks super tight on this name. I mean, at worst, you know, the piercing of the 50-day I think would be your exit point, because then yesterday you would have been probably shaken out of the position.
yeah, and you're undercutting the lows of the base, so I think the rally back up into the 50-day line is kind of normal, but that may actually make it shortable. There was news this morning that Starbucks, I believe, had divested. They own a big stake in the company. Not a big stake. Let me check the news on that real quick. Let's see. But there was some news about them. Starbucks lowers this is yesterday after hours, lowers passive stake to 4.5%, which was 9.5 million shares versus nearly 12 million shares. So they cut it by about, I don't know, what is that, 25% or so, something like that. Anyways, so there was that news. I don't know if that's good or bad, but these guys do come out with earnings next week, so I'm not really going to be interested in doing anything with this ahead of earnings, so it's still sort of a crapshoot. So I like the way, just as an aside real quick here, Arison Networks blows up over here. So if you had owned the stock, you probably would have been selling this one out here. Of course, now you get a big old massive gap up to the upside on earnings report this morning. So you could have played that as a viable gap up, similar to NetEase. But interesting how these things look like garbage one day and they slowly resurrect themselves, and then boom, it's off to the races again. So we'll see if it's able to sustain any higher. This NetEase, Dr. K, it had a nice move yesterday if you bought it near the opening, and now it seems to be settling back in. So we'll see how this one acts.
Yeah, a number of these Chinese names have been doing pretty well. Baba is one that just is having a tough time getting going. It is a leading stock, however, and it was right near support, right below the Bible gap up day, but it's pretty much going sideways, more or less constructively. So there's no reason to panic on this one. I mean, you can keep your stops real tight, just right under the low of the gap up day. So that's 99.9 basically. And you know, you look at some of these other Chinese names like Momo, that's got the momentum, and you've got Wix, that's that's been doing well. I had a good earnings report, WB, more or less in an uptrend. So yeah, as far as BABA, it's kind of putting me to sleep, but it is a leader, so it also has less volatility than these other names. So if you're more risk averse, or you could just hold a bigger position in something like BABA, you have that luxury because the volatility is lower, and the pattern's fairly tight. So and you know your exit point. But I would imagine with the market to continue to uptrend, and should these Chinese names continue to uptrend with it, which I think is a good possibility, that BABA will eventually break out of this little handle that it's been forming. Let's see, what else was there? FCX wanted to mention that this is one of those stuff stocks, which, as we've said, tends to trade in wider price bands. So you have the option, if you're going to trade this one and you're trying to hold it, you have to keep your stops a bit looser. Today it's actually violating the 50-day moving average, but again, a lot of these types of stocks do that and then find their floor. And the other way to trade it, if you're more risk averse or just want to keep your give back more to a minimum, you should sell these in some sort of strength. What else is there? Facebook, yeah, today's report, obviously, it's finding support at the 10-day, not 10-week line. It's getting quite tight and constructive in there.
I don't think I'd buy it up here, though. If you look at this on the weekly chart, it's I'd wait for a pullback to the 20-day, assuming I did want to buy it. But I wouldn't buy it right here just because it's holding the 10-day line. If you look at this on the weekly chart, you can actually see it's wedging along the lows up here as volume's declining, and you have a big volume outside reversal off the peak. So I think if it's gonna build a handle or something, it's coming into at least the 20-day moving average, and so I don't think I'd be sticking my neck out on the stock here. I also wanted to point out, Dr. K, you mentioned Momo. That thing's breaking out today. My inclination would be if I bought it down in here, anywhere off these moving averages, I might sell into that and take profits. And I think that makes sense in some cases. But anyways, just wanted to point that out. Also on BABA, it looks constructive, but the bottom line here is if this thing needs to hold this level, and I was not too impressed by the fact that it almost posted a pocket pivot 3 days ago on Wednesday, and then it just kind of slid right back over yesterday, and it's not really getting any volume support, so I'm a little concerned this may pull back and undercut the lows. But I think if you're looking for a low-risk entry point, this is close to 100. Or what did you say, 99.94 is actually the intraday low here. So I think as close as that as you can get, and using that as a tight stop is probably your best bet. But I don't know. The market right now, I think it needs to pull back, and you're seeing some names getting a little sluggish. And again, there are schizoid areas of the market. Like this Finisar was just really strong the other day, breaking out straight up from the bottom. And now they blasted today. I guess you could try to buy it off the lows. And if you don't take your profits, you're basically losing most of them this morning, and you have to react to some of that, I think, in a more proactive way. Here's this Ocular is another one holding up pretty well in the group. We don't have a lot. What names do we have in this? Do we have any names in this group on our list? Lumentum is extended.
Yeah, I don't think we got Telecom off.
Sienna, this one broke out. It's kind of pulling back to the top of the base, and that looks okay. Fabrinet, you guys remember this one? It broke out, but look at that pattern. I mean, that's so erratic. That's you're gonna start buying the crap out of it here? I don't think so. Maybe on a pullback. That's why I think you want to watch this market and just let it settle back in. I think it needs to pull back, and we just need to get some of this extension worked out and then see where things go from there. But I think I'm not going to start stepping into names left and right in here. I'd like to see this sort of settle out. Anyways, did you have more names, Dr. K?
Yeah. Well, yeah, and because the market, I think, is becoming more vulnerable to some sort of minor pullback, and we know that a minor pullback of 1 or 2% can be a major pullback in some of these leading names. And also another reason why Facebook, which has had a outside reversal, well, it had a reversal day, on earnings a couple weeks ago, and that's another reason why the current action is very constructive and it's very tight. So that bodes well for it. But again, it would be perfectly reasonable if you look at the price history of this that it would pull back to the 20-day before going higher, especially in a market that is more vulnerable to some sort of minor pullback. On Momo, what's interesting, I like these kinds of patterns where you have a sell-off, and then if it can close at its highs or near its highs, but on volume. If you could do that, then sometimes I'll morph into actually putting on a position, because that's just the inverse of a high volume reversal day. This outside reversal day. This is the high volume upside reversal day. But the volume has to be sufficient. And right now, I'm not convinced. The volume is about 85%, which is pretty good. But for these kinds of patterns, I'd like to see a good spike in volume, not just 85%. And that's the same. Obviously, goes for the outside reversal, the downside outside reversal cases, because usually those are met with very high volume, like in the other example we showed.
I think the thing to remember, though, about Momo is if you look at the weekly chart, you're coming straight up back to the highs of this cup, and you're pretty extended. I think the place to be buying this was down in here, not near the 50-day, not up here. I wouldn't touch this thing up here. I know it looks good today, but the market will show you little flashes of strengthy type moves and near the peaks, and they just end up pulling in. You're better off looking at weakness. So would you really buy this today based on what it's doing today, Dr. K?
No, like I said, I'm not impressed with the volume. The volume has to be appreciably high for this kind of pattern to work, especially since it's up against, like you said on the weekly, it looks like it needs to form some sort of consolidation, and the market in general is kind of vulnerable. But I would like to, if right now if we were trading at 300% rate, I would be very interested, provided it can close near the top of its range. Because it's the inverse of the bearishness of the downside outside reversal. This is it's the converse, not the inverse, the converse of that. So it can be a very bullish, strong pattern. It just shows that a lot of the weak holders have been shaken out because of the volume, and now it's ready to go higher. But like I said, the volume is only at 80 right now. It's 83%. So really, I don't think we're going to get there. I don't think all this huge buying volume is going to come into this name today. So I think this is going to be one to watch for on pullbacks, like we've advised, when it was coming up through, the 10 and 20-day moving averages. That's a much safer spot in general, because you can also know your downside, which is pretty limited. Oh, you want to mention AKS is one that had a pocket pivot the other day through its 20-day, and so this one, it could go up toward its 50-day. Which on a percentage basis is pretty good. That's about 10% from where it's trading right now. And lastly, there's Twilio, TWLO. And that one, this one, like Acacia, they're trying to form possibly the right-hand side of their basis. Their stories are great, fundamentals are great, and they both were off to the races after they were IPO'd. They were the two leading IPOs, actually, two leading stocks on a percentage basis. So the question is, are they going to be able to form that right-hand side? When we saw that, we saw some pocket pivot action about a week ago, but keep in mind that there's a lot of overhead resistance to deal with. So with these kinds of gains, I mean, Twilio had, what was it, it was almost a 10% gain on Monday. So you kind of want to take that, or take at least some partial profits, because you've got 10% gainer in a day. That's great. And also knowing just that there's going to be these things aren't going to be real clean going up the right-hand side of the base, just because of that overhead resistance. So this kind of pullback that we're seeing over the last 4 days is completely normal. But again, you don't want to be holding one of these for a longer-term basis, because we don't know that this is going to be able to form the right-hand side of its base. It could just as easily go below 30 or lower.
Yeah, I'd look at it at the 20-day line. Volume is actually up, 20% right now on the day. So I would, like I said, a lot of these names I would just lay back and just be opportunistic. So is that you, Dr. K?
Yeah, that was just my W. I'm just monitoring a lot of
We got some
names.
questions. Someone's asking about IDCC. Well, I mean, you had a breakout. There was a Bible gap up here, so if you like that, I guess you could go for it. You know, I don't know if you need us to bless your trades for you, but on the basis of the Bible gap, if it's holding the intraday low, which is 97.90, so that would be a stop or selling guide. But of course, look at the weekly chart. You look like that. So you've been going up for a while. You're stalling a little bit up at the peak, and you're actually extended from a breakout point, which would be down in here. So those are things to think about. But if you can keep your risk, you know, either to this low 97.90, and that's your selling guide, then you know, it's in position. But I can't tell you if this is the next Cisco or not, though. Anyway, someone else asking about Goldman Sachs. But I think, you know, any financial looks kind of like any other financial. So if you look at JP Morgan, it's also doing the same thing. Wells Fargo is also looking similar. The one that we have on the list, Zions Bancorp, looks similar. You can basically pick and choose any one you want, and they all kind of look the same. So it's all this, you know, the XLF, as Dr. K was saying. So you can just buy that, but they all look the same. So, you know, if you like to buy breakouts, I guess you could say this is just, you know, breakout here on no volume, not even a pocket pivot, but it's holding up and moving moving higher. So that's what it looks like on a weekly chart. So, ooh, look, it's a high tide flag. So there you go. Jump all over it. Mortgage a house, put it all in. Let's see, any other questions here? Some other names on the list. This AGX, Dr. K, is this is starting to look like a short to me because it undercut here, so you get the logical undercut and rally move. Now you have resistance at the 50-day moving average, which looks a little bit troublesome because you don't really get any volume yesterday. So I don't know if this is a short or not, but we need to pop back above the 50-day. The other thing is this has followed the 50-day moving average the whole way up. So I guess based on the 7-week rule, you would be using that as your selling guide. So Dr. K, would you just be selling this one here?
You're talking about I mean, AGX is a bit of a mess. So you know, if you have any position in this, you know, you should be out of it.
Yeah, I'd be selling into this. If it traded more volume than 222,000 shares a day, I think I might short it, but we'll see. Anyways, look at Alibaba, and here's Amazon. Amazon looks like it's trying to break out. It's right at the peak of the base. It's a little wedgy here, though, so I don't know. Seems a little like it could be in fake-out land, but I guess we'll see. If some big volume came in, maybe that would, because it is actually breaking out. What's the volume rate today? It's below average right now, just barely. But this is kind of
-7%.
What's that?
-7% on it.
Yeah, so I don't know. This is kind of weird. I think the place to buy it was when it undercut this low. Remember I talked about this a couple weeks or last week. You had an undercut of this low here, and then it turns right back to the upside. That's your classic ugly duckling type of setup. So, but I don't think you could buy it up here. So I guess the option, if you really wanted to buy it, would be to just buy it here, use 840 as your stop, I guess, the low of the day. On the other hand, if it fails, it could be a short. So FTNT is another one. Someone's asking about that. We had that on the list. That's basically in a flag, and it's kind of undercutting the lows of the flag, so it might be in a better position to buy in here. So that looks a little better to me. But so far it's just not going anywhere. But if you look at the weekly chart, it's building a 2-week flag so far. So depending on where it closes today, this could be a nice tight 2 weeks in here. It would probably need another week to become 3 weeks tight, but that I wouldn't really wait for that. I think maybe if you wanted to buy it, you use the low at 36.90 as a pretty tight stop here. Box is coming out with earnings when? The first that one's just hanging out. That acts pretty well. Ever since we put it on down here, it just keeps trucking along the 10-day line. I think that's not 7 weeks yet, so would you still use, what would you use as your selling guide here, Dr. K?
Well, I would say, you know, it's just been obeying the 10-day pretty well, so that would be my preference.
Yeah. I don't know. If I bought it down here, you've got now about a 20% profit in it, so you could consider taking some off the table into earnings. That's one possibility. Here's this new one, a chemical company, had a buyable gap up. It's been holding within range of that, so that looks pretty decent. It's acting okay, that's what I mean to say. Let's see.
Yeah, it's also been one of the strongest price performers too on the weekly.
Here's CUDA. This stock's actually acting okay, but it's just kind of basing, so there's nothing really terribly exciting here. But on the other hand, it's not coming apart, it's just kind of basing, setting up on the weekly chart like that. So that actually looks reasonably good. So the trick here is to be looking to buy on weakness. So, you know, that's so you could say, you know, you could have bought some today on the pullback, and I guess you would use the 50-day as close to the 50-day as possible. You would be trying to buy it, so the low here would be 23.31. So you got within 20 cents, less than that of the 50-day line. So that could have been in viable range right there. So anyways, market's just flopping. And Nasdaq's actually up, so it's holding up. So, you know, everybody's worried about a pullback. It hasn't happened yet, but it feels to me like you could get a pullback, but I'm more or less operating on the basis of individual stocks, and a lot of these have had sharp upside moves, which leads me to naturally take profits. So what will happen is I'll naturally move into a cash position, or more of a cash position, as the market's going up. So like in a name like this, if you buy it, you know, down in here and you're playing it, it runs up like that, you'd sell into that. Momo is another one you'd sell into. Even the move in Twilio, I was actually onto this a lot sooner down here, and so I've been selling into the rises here, and you're not getting anything yet, but I'd keep an eye on it. So we'll see what happens here. Let's see, any other questions? Let's go. We'll keep going through some more names here. Whoops. Glaukos coming out with earnings, I think, the first week of March, and it's just holding up okay. No real problems there. If you're in the right names, they're hanging in there okay. JD has a pullback down to the 10-day line, but that one's been doing quite well since we put it on down here, down in the 26, 27 level. It's not ripping to the upside, but it's kind of trending higher very nicely with the rest of the Chinese names, so it doesn't look too bad. Momo, of course, we already looked at. Mosaic, probably in a pullback zone right here, and so coming into 10-day, this is where you would buy it and use either the low of today, or you could use the, I don't know, I guess the 20-day exponential, which is at 32.39, or the 10-day real tight at 32.90, or the low of today if you wanted to. So, but we'll see how this one holds up. You've had to buy this on weakness. Same thing with Freeport McMoran, but that's looking a little bit dicey. The other issue here, though, is it's undercutting this low. Maybe it needs to undercut this low. But I noticed that the copper stocks, some of them have been getting tagged. We have Southern Copper is getting tagged here. I don't know if that sets it up as a buyable situation here, but I'm a little wary of that. What are the other ones? Rio. That one's coming out. That one's actually acted okay. So, but and these are a little bit tricky here. You don't want to be buying into strength. It seems like buying them on weakness makes the most sense. Netflix. I didn't really care much for the way that Netflix, it has a pocket pivot in here, and then it immediately breaks down and drops below, right here, drops below the 10-day line on volume, and then you wedge up. See, you get wedgy volume here, and you wedge it back into the 10-day line. Now you're rolling back. So, so I actually shorted this one earlier today, and I covered just a little while ago on the 620 because it's getting a MACD stretch. I want to see if it rallies here, but I'm keeping an eye on all of these bounces today, and this possibly, I think if you're getting in a nice pocket pivot here, a nice volume, there's no continuation, it just rolls back, and it's starting to look like it could fail. So I'd keep an eye on this. If this fails, it may be telling you that we have more of a pullback coming, and you'll see some of these leading stocks roll over and maybe some new leadership move to the forefront in a sort of a rotational correction, assuming that's what any correction is. So, but you don't know until you get into it pretty good and you see what's really happening, and if there isn't an outright market top or more of a serious correction, which, you think about it, the Dow going from 20,000 to 20,639, I think was a peak yesterday, 639. 2 or 3% pullback would take you down 500-600 points. So it'll look scary, but I think you just got to watch the stocks and operate on that basis. So like I said, I'm just kind of laying back here. When you have a good run, I found in this market, you have a good run and you take your profits, and then sometimes I'll throw out some shorts and test some things and just kind of hang out and not get too committal one way or the other. Although I generally don't have a problem shorting something that I think looks weak. Like I think Netflix potentially at the 10-day becomes a short. Just sort of watching it. It's also NVIDIA is another one. And then, of course, I'd keep a close eye on Facebook, which is up here. But it looks to me like it needs to come in. So even the pattern here would argue that it needs to come in, which could drive a market pullback, a normal market pullback and correction. So, I mean, a short-term correction is 3 to 5%, but that's 1,000 points. 5% is these days. Is that right? Yeah, 1,000 points. I can do math. Let's see. What else? I also find when you get into this position with the market, you kind of feel it getting tired a little bit. And here's Nettie's acting pretty well. This is actually was very actionable. But you can also see, again, all of these Chinese names had bottom fishing pocket pivots. Here's the bottom fishing pocket pivot right here. And then you have sort of a roundabout pocket pivot right here. And then it hangs and comes into the 10-day. And you'll notice that at the same time, Nettie's was doing this. So was Momo. So was Weibo. They're all doing the same thing. So it's like, 6 of one, half a dozen of the other. If you own one of the names among those three, say, then you've done pretty well. Nettie's, you would have had to hold through earnings to get the full move yesterday, but you could easily have come in the morning on the buyable gap up. So, but those have all been doing well. Bob is a little bit of a laggard, but it's more of a big stock type name. Okay, let's see. What else? Nutanix. They've got earnings on March 2nd, but see, you're coming right into the 20-day line. Just pulled up my HCSI chart. You're right into the 20-day line. What's your volume level right now? Minus 22%. So you could be coming into an area where it's a lower risk buy, and I'd be buying it here rather than buying the pocket pivot. And you can see that the way this thing acts, it doesn't really obey. Kind of reminds me of JD back around, remember JD back here when it was around all these moving averages? It never really held any of them, but did hold the lows of the pattern and held above the 200-day line, which is that red moving average. But this one's a little bit like that. So I would never buy the strength in this and try to be opportunistic, and maybe the pullback in here into the 20-day line gives you a better buying opportunity. Part of the movement in this, though, recently I believe has been because of some talk that Cisco would be buying them out. Cisco's sitting on a ton of money, kind of like Apple, and people talk about them buying out various names, and this is one of them. So, I mean, I like the story here, and this might turn out to be a little more viable down here than up there the other day. So, I always like buying the weakness. Now, notice you get a higher volume pullback yesterday on this thing, and that looks a little bit funky, but this thing has had high volume pullbacks throughout the pattern. It just sort of jags its way higher. So obviously, if you're going to come in on this on the long side, you want to be coming in on the pullbacks, and it may not look so appetizing. That's the other thing about these pullbacks. You'll get stocks coming into areas of support. The volume's light. If you like the stock, then you got to take a shot, but at least you're doing it at a point where you have a tight selling guide, and you're kind of at an extreme. So, for example, the 20-day line here is 31.05. Stock trading at 31.36. That's 30 cents. That's 5 teenies, 6 teenies, something like that. I don't know. but not very much, 31 cents. So what is that in fractions, Dr. K?
Yeah, it's 5 or 6 teenies.
6 teenies or 5 teenies?
6
I'm getting nostalgic though. Let's see. I gotta tell you, back in
fraction.
the days when things traded in fractions, the movements didn't seem so bizarre. Things would trade at an eighth, 3/8, or 3 teenies and whatnot. And it's 6 and a quarter cents on a teeny. And
Yeah. Oh,
things would move around like that and it looked normal. Now you see things going up and down 12 cents, 13 cents. They look like they're moving a lot, but they're not really. So it can
because of
throw
those
you for a loop.
regulations.
What's that?
Those regulations kicked in. I remember, back in the day, this would be 1996, 1997. You could easily buy 10% of the average daily trade without moving it around very much, and that's because there were tons of market makers making markets in these stocks because they were getting 1/8 spreads at minimums, and then we went to teenies, so that's 1/16 spreads, but the markets were still very liquid at that level, less so I would argue, but still liquid. And when we decimalized, then a lot of the market makers couldn't make the profits they wanted to, so they left, and that caused liquidity to dry up. So your slippage now, I mean, try buying 1%, let alone 10%, but 1% of the daily trade in some of these stocks, and you can move the price, easily a few percent if you're not careful.
Okay. This QTNA volume is 11% above average right now. I don't know if I like this per se. I'd like to see it dry up, but it's a thin stock. 229,000 shares a day is what it trades. Seems like I don't know.
Actually, the volume picked up now. It's 25%, so that's not looking as good anymore. We'll see what it does the rest of the day, but it's not looking as good as it was earlier.
No, I don't know. I don't trust this stock. It's too thin. Somebody's asking, I guess I didn't read the whole question about the IDCC. You're asking us, should you hold through earnings? I think if you have to ask somebody else whether you can hold through earnings, you're not really thinking, because we don't know whether you should hold it through earnings or not. If you have a sufficient profit in the stock and you bought it lower, then you have some cushion to hold it through earnings. If you didn't buy it lower and you just bought it here and you think you're going to sit there and make a bunch of money on some sort of gap, if you don't know, you have no idea, and we don't have any idea either. So you can only base it on how much money you're willing to lose if this thing gets tagged, which it could. So I know somebody who bought Yelp into earnings and sat there, and then they got hit after earnings. So it looked good going into earnings. It was acting pretty well ahead of that. Now it's a little wedgy on the move to the highs. Notice how it just starts to break out and it looks strong, and then it fails. So now, to me, this was a short once it gapped down. But you have no idea, and we have no idea. And if you think you do, then you are the greater fool, because we sure as hell don't know. And I think it's just a matter of, do you have enough cushion in the stock, profit cushion, so that if it gets tagged for 10 or 20%, you'll at worst see your profit disappear, which to me, I don't really care to see that, so I don't even bother playing earnings roulette. Anyways, so that answers your question, hopefully. But, figure it out. How much are you willing to lose if you're wrong? And there's nobody who knows what's going to happen after earnings. Dr. K and I make a practice of betting a dollar every time. Fake dollars, of course, or euros, right? No. Anyways, we bet on, what do you think this stock's going to do after earnings today? And most of the time we're wrong. So anyways, I'm not insulting you, so I wouldn't be so thin-skinned. Just if like I said, if you're asking us if you should hold a stock to earnings, that's a silly question, because we don't know. And if you think we know, then you're also being silly. So if you have a thin skin about it, I would suggest you don't really have the psychology to be a trader. But the bottom line is nobody knows, and so you have to decide how much you are willing to lose. And I'm trying to frame the problem in practical terms here. So, you don't need to wear your emotions on your sleeve. Anyways, how much are you willing to lose? That's it. Anyways, where are we? Did we take STLD? off our list on the breakdown here?
Yeah, we did. But the others remained. X and AKS are still on there.
Yeah, notice how this one looks like garbage, and it violates the 50-day moving average. Not only does it violate once, it violates it twice. And it turns around and goes right back above the 50-day moving average. Was that enough for a pocket pivot? Let's see. 6,231,000. No, it just missed. Just barely missed by about 70,000 shares. But look at this thing. It comes right back to the top. This is so typical of how stocks will act in this market. They look like garbage one day, and the next day they're off to the races. Same thing with X. We kept X on, though, because we thought it was the leader among the steel names, and it undercut the low. See how it violates the 50-day moving average? You have a big outside reversal in here, right here, and the volume is very heavy, and it looks like garbage, and you end up undercutting these lows. You turn right back to the upside. You have an even bigger volume pocket pivot. It holds very tight. The volume dries up. It's a buy right there. I think we talked about it over the weekend, a couple of weekends ago, or maybe last weekend. In any case, it's had a nice move. It's broken out, and it's within buy range of the breakout if you buy breakouts, but I wouldn't buy this on the breakout. I'd look for some kind of pullback on market weakness. So anyways, let's go to the last name here. Vive. Oh, whoops. Wrong key there. This one's acting great. Only problem here is that earnings are due, oh, when? On the 28th, so that would be next week. So I'm not really willing to do anything here ahead of earnings. I just leave it alone, frankly. And but it acts well. You know, the base looks pretty good. The only problem, you like this base, Dr. K? Do you have any issue with this big downside week we had back in late November?
Well, you know, obviously that's a flaw in the pattern, but as we've seen plenty of times in these squirrely markets, that you know, stocks can right themselves quicker than in the past. So you know, it's trying to tread around its support here. I don't know. It's still a little bit. I don't know. I'm not crazy about it. But also, if you're holding a position, you know, it's not doing anything horribly wrong. It's kind of trying to get quiet in here. So, you know, and your downside is pretty minimal because you can keep your stops pretty tight.
Yeah, I suppose. But would you hold it through earnings?
No,
No.
because unless you're cushion, and you have a cushion based on this pattern.
Right.
So that's the thing. You know, we've said this before, but to anyone new today. The earnings clues the day before earnings used to be more valid. In other words, if a stock did something good or bad with its price volume, that would be a prelude to the outcome on the earnings report. But these last few years, you can't really do that. And I think it was, what was that piece of regulation that came in?
Reg FD.
Yeah, Reg FD, Fair Disclosure, that pretty much put a kibosh on those clues.
I noticed Apple, I thought this was pretty funny. Goldman Sachs came out the other day and put a buy recommendation on Apple. It was trading at like 130, what, 233 earlier in the week, and they put a buy recommendation and a 140 price target on it, which I thought was, whoa, you know, stick your neck out there. So 140, that doesn't leave a heck of a lot of upside, but the stock's trying to break out of this big pod-like structure. So, you know, I don't know. I'm a little wary of some of these things. Like this thing's way up there, and it's gone straight up since the beginning of the year, and somewhat parabolic, and it's in this huge pod-like structure, and that makes me a little suspicious up here. So this is what I'm saying, and it doesn't necessarily mean I'm getting abjectly bearish here. I'm just noting that stocks are in positions, and a lot of stocks that I've owned have had some nice run-ups. You could look at Tesla, for example, as another example. And that's, you see this one coming all the way to the peak, and it's sort of reversing off the peak, but it's sort of like a pod punch bowl formation also. So when you see this, what you know is, okay, you've arrived to the fence, okay, and the stocks are now sitting on a fence, so to speak. So you're at these highs and these big patterns that could become punch bowl formations. And so you're watching this as it plays out in real time. If they start to break down, well, now you have a rationale for understanding some of these patterns as short sale targets. So you got to kind of watch and see where the action goes, but you reach a point where we're either going to set up to move higher or you're going to start to see some things fail. And that's why I'm talking about watching Facebook and Netflix and even Amazon if they break down. Okay, so you're in those sorts of positions. Here's one. I've actually got a little short in this one. On this reversal off the 82 level a couple of days ago, it came back to the 10-day and it's sort of flittering around. But notice that I think they come out with earnings next week, so the week after. No, next week, the 28th. Is that right? Hold on. What do you show there, Dr. K?
Just checking right now.
I think it is in 228. So this sort of looks kind of funky to me. And you notice how you're getting these stalling weeks up here over the last 2 weeks. So off the peak here, you get a reversal off these highs right here. And I'll take a little short position, get a feel for it. It's up again today, but not by much, and we'll see what happens. But that's another one that could potentially break down, and maybe it doesn't happen until after earnings. So unless I have a big profit cushion in it ahead of earnings, I'm not going to do anything. I'll probably cover it and go away. But I am getting a feel for this here because that's the way I trade. I take positions and then get a visceral feel. Just like if I get short here, a couple names, say even the Netflix, which I've been shorting and kind of pinging for scalps over the last few days, but I get a sense earlier in the week when I shorted it and it just rolled over, and that worked pretty well. I mean, you get $2-3, nothing tremendous, but it's showing it's a little spongy, and so it at least tells me I don't necessarily want to be buying the pullbacks just yet. I need to see things set up a little bit more. So that's how I'll test it out, and if I start to get a feel that this is the direction the market's now moving in, it'll naturally push me more short. Look at some of the other things that I've been working on the short side. ACAM, bingo. There's a shortable gap down. It undercuts this low. See that? And then that causes a little rally, but that's just like a bear flag. And then boom, it breaks down. Starbucks, I think, is interesting right here because it's stalling at the 50-day moving average. So, and I'm actually short this one on the basis of the 620 chart today. So I'm working a little short position there. Let me see here. Grub, here's another one. This one is rallying. There's a buy rec on it today, and it's rallying up towards the 50-day. I'm watching this one. I put a little bit out on it earlier at about 37.52 or 53, something like that. It just didn't really feel like it wanted to roll back, so I covered, and I'm just letting it rally. Where are we at now with it? It's at 37.77, so it might push a little more. Somebody put an overweight rating on it, which, I guess they're insulting the stock and calling it overweight. Anyways, it's fat. It's Grubhub. It is a food ordering name. Anyways, let's see. Yelp also, like I said earlier, that becomes a short. Now it's sitting underneath the 200-day line. Notice it's undercutting this low in here, so that may bring some sort of rally back up. But that's also in my short sale watch list. I have had Schwab on, but it worked up here, and I've made money on it. I've been watching it just keep rallying along with the other financials, and I think you need to see the financials in general. If they start to slow down or roll back, then that might be one to go after. But right now, it's sort of not in position. It's almost in a viable position now. So Z, I think this is turning into a short, or could it? We took it off the list on the gap down after earnings. And again, here's another one where if you played earnings roulette, you got whacked pretty good. Now, of course, it bounces all the way back, fills the gap, and stalls at the 50-day, and that becomes a short right there. So, things you got to watch for. If we're taking names off of the focus list that are failing, then you want to watch those names because they could morph into shorts, like I think NVIDIA probably is. But we'll see what happens here. I'd like to see a nice bounce up into the 20-day line. I would come after that probably more aggressively. So Intel, big stock short. kind of coming up into the 50-day line. Not much going on here, but that's one to keep an eye on. Martin Marietta, this is a materials name, Martin Marietta Materials. Here it is breaking down. And this, broke below the 50-day line but held and then tried to rally and then failed, and now it's starting to come off on volume. And this is looking, well, it already was a short earlier. You can see now we're down 66 on the 67 on the Dow. We'll see what happens here. I wouldn't be surprised if we went lower. But like I said, I'm not looking to step in here on the long side just yet. I want to hang out and let things kind of settle out, and even, like I said, I'll test the short side. So let's see. But okay, you have that one breaking, and Eagle Materials is maybe starting to break down, so maybe that becomes a short here. It was the only one acting well. Vulcan Materials also broke down, and CMEX is breaking down. And what other names in this group are there that are exciting or not so exciting anymore? They were exciting for a while, and now they're not. Just like that. So that's the other thing with this market. You get these breakouts. See, CMEX, you have a breakout. Martin Marietta, you have a breakout up here. See the breakout? And they go nowhere. They break down. And then maybe you get something like a CAT, which breaks out, and then it fails. So you get the breakout here, boom, and then it fails, undercuts the lows, rallies back up to the highs. Maybe now it's going to roll over again. But this sort of action will really throw you for a loop, and I think it's what makes this market so difficult to navigate. There's just funky stuff that happens, and some of it happens out of the blue. And it is why I will tend to swing trade these names. I'll buy them on weakness, and if I don't get a move, I'm either gone, or if they stop me out quickly because I'm buying very close to the moving average. Example, the Nutanix right at the 20-day line. 31.45 we're trading at. 31.05 is your 20-day line. If it doesn't hold, then boom, you're gone. And then it moves up, I'll sell into the move. And do that over and over again, and it's worked pretty well over the last 4 years, so I'm not going to really change my ways. I know some people get offended by the fact that we don't buy stocks and try to sit with them, or buy breakouts and try to average up every 2% so we can get killed when the stock pulls back. But that's just the way this market operates. And so when you get names, and I've talked about this many times before, when you get names like Momo turning off the lows, you got to find reasons to buy them on the turns instead of thinking, oh, it's breaking out, I'm going to come after it now. Because I think your risk is much higher in this market. I don't really see very many stocks trending strongly. They tend to have their moves and they break down. Dr. K, have you seen any stocks that you think are trending very strongly?
The only time in the last few years that I've seen the action that I did was, I guess it was, let's see, we're February 17th. So it was several weeks ago. It's just more proper names are coming through, and but still we were a far cry from having a good number of names continue their uptrend. So all of a sudden you see some good names coming through your screens, and that gives you a little bit of hope. But the problem is most of them don't follow through, or they kind of stagnate. They still look good, but we have a number of names we've seen that they make their moves for a few days, and then they just kind of go sideways for. So it's a tough market still. I really don't see the the market, the general market's nice because it's been in a nice uptrend, but individual stocks themselves are still not acting the way they should. By that I mean when you get a consortium of good names that are in uptrends. So like last year we saw NVIDIA was one of the few names that had a really good uptrend that was quite clean. But it's so these names are rare. And right now, I'm still seeing that degree of rarity. Perhaps if we can continue this uptrend, there'll be more names that start to uptrend in earnest as well, and that'll be a first in quite some time, quite a number of years, if that does happen.
Yeah, I think things are going to have to change a lot more than they have before we start seeing that type of a market again. So, anyways, what else am I looking at? Well, I've pretty much gone through most of my short sale watch list. Lamb research, or lame research is like that. That one's looking a little shaky, but who knows? I don't know. It's trying to hang here under the 20-day line. What's your take on the VIX, Dr. K? Are you ready to go long the VIX, or are we still short the VIX?
Still short the VIX. With this uptrend, you'll see that the VIX, when it gets appreciably low, it tends to somehow find its way higher. And we've seen this action since the elections. To get down to under 12, and then it goes up a couple points. And it kind of goes back and forth like that. So, what I like is that it did spike the last 3 days. So this, in a way, could give some room for markets to find their footing and then move higher. There's nothing that says that these markets have to correct to their moving averages. Keep in mind that if they go sideways, the moving averages will increase each day, so we'll catch up with the price. And so that would be one possible scenario, and then meanwhile the VIX might tread water and then start to go lower once again. And we mentioned this before. People have used the argument that around 10 to 11 the VIX is at multi-year lows. But I would counter with that by saying that in late 1996 the VIX was appreciably low, and it just kept going lower and lower and lower through one of the best, strongest market uptrends, with many stocks accompanying that market uptrend that the market had seen since 2003. So when I think of good periods and the sweet spots in the market, I think of late 2006, I think of 2003, and then of course we all know about the 90s.
Yeah, I mean, you can see the VIX has been a lot lower. So just because it's low doesn't mean it has to go up. Even though a lot of people like to bring that up, it just doesn't really, it's not really relevant. I mean, the thing you do is just watch the stocks. And that's basically it. So, from my perspective, if I've had some stocks that have had some decent moves, then I'm going to sell into those and take my profits. Look at even like, BABA, and I played this one a few times. Bought it along the 100 level a couple weeks ago, and then you get a nice move to the top of the range. 4-point move, boom. Sell it there, it comes right back in. And you'll get a lot of this sort of range-bound action that really doesn't go anywhere. And so you're basically doing these little trades, every once in a while on the pullbacks, you're buying and then selling up at the top of the range, and that's really all you get. So I don't know what it's going to take to get things to change. Maybe we need to see rates rise for a period of time. Maybe we need to see a good old-fashioned real correction, something more significant than we've seen, and something to really clear the decks. And maybe by that time you see some tax cut policy come into play, and some fiscal policy coming into play, and rates have normalized, and things are starting to look good. Yesterday we had what was the Philly Fed survey of business conditions or something, which had this highest reading in 33 years, which tells you that everybody's pretty, shall we say, optimistic, but that doesn't really tell you anything in terms of what's actually happening business-wise. That's just sentiment. So, I don't know if that means that we're going to see the economy booming going forward, but I guess if it is going to be, then you'll see the market hopefully go through some kind of correction here and set up again. You get some better setups and some names, things pulling back into viable areas, lower risk areas, and get set up for another move higher based on what might be coming down the pipe. But right now I think you're in a position where you can kind of lay back and pick and choose your spots. If you own some stocks where you have profit cushions, then it's a simple matter. If you're not actively trading like I do and swing trading and selling into the profits and then laying back and looking where I want to buy back in, if you're trying to hold positions and you have some decent cushions in some of your positions, then I don't see why you couldn't just use a trailing stop methodology to trigger your sells if things were to get out of hand. So just make sure you're getting out with some profits. Let's see. Someone's asking about TCEHY, 10-cent holdings. That's kind of interesting. Bible gap up yesterday. So you got a Bible gap up with the low of 26.90. Well, is that a Bible gap up? No. What is that?
I wouldn't call that, because it's one of these ADRs that you can see in the pattern. It gaps up and down on the daily mainly. So it's always obviously in context to the chart. And that said, I mean it's a constructive looking chart. I don't see anything wrong with it. And it's a little extended up here, so I wouldn't be buying it up here. But three days ago, it had a pocket pivot that wasn't too extended. That could have been bought. It is a Chinese name, and like I said earlier in the broadcast, these names are uptrending more or less. As far as their story, they're a massive company. Their market cap is as big as Baba's. It's about just north of $250 billion. And they're all about the internet and mobile value-added services and online ads. So their growth has been pretty strong. Their sales and earnings have accelerated. So fundamentally, they're looking great. But right now, you're a little late buying into where it's at right now. I mean, in this market, it's not a forgiving market. So it's not like the 90s where you could buy things late, which I would do quite often, just knowing that the odds were with me that the stock might go up another, 20, 30, 40%. But in these kind of markets, you've got to keep your risk. Risk is always the most important rule, and especially with markets that are unforgiving. So, buying up here, where are you going to sell it? You'd have to wait for potentially it to break down to the 20-day and below that. So that's a bit, how many percentage is that from here? That's a good potentially 8 to 10%, which is too much risk for this market. I mean, keep your risk. Generally, if you're buying right, if you're buying on a voodoo kind of pattern, which you've mentioned a number of times, or if you're buying on constructive weakness, your sell stops could be placed typically 2 to 3% from where you're buying it.
Yeah, I mean, on this one, I'd look for a pullback to the 10-day. Another question real quick before we wrap it up. Tail end. This one trades 71,000 shares a day, so I don't even want to touch it. I mean, I know it's rallying, but so if you have a teeny account, then I suppose you could buy it. But I don't know. It's really, you see how loose it is on the weekly chart. Let's see. I don't think I can even tighten this thing up. Yeah, even if I try to tighten it up, it still doesn't. By shrinking the chart, it doesn't tighten. Oh, there. Now it's getting. Oh, look at that. Now it's getting tight. Okay. Now that's just too goofy. So I wouldn't mess with it. I just leave it alone. It's too thin. But the other thing is, again, why you see the stock showing strength, and that's really not the time to be looking at it. The time to be looking at it is when it's pulling back. Like this other one that's a little squirrely that we have on the list. Do we still have this on the list, or do we take it off?
It's TTD. No, it's still on.
Okay, so this one has. Yeah, that's right. It is. There are actually a couple others I missed here, but this one breaks out. It's forming an IPO base. Here's the base. But see, here's the big problem with this thing. It's just real loose. Look at how loose it is. You have no tight weeks, no really tight ranges in here. There's a couple, but and so it's breaking out now. But the place to buy it, and we've talked about this on the in the weekend focus list report. Or rather the focus list weekend review or whatever we call it, you want to buy it on weakness here. So that's another one. Here's this other one, Thor Industries. That one's hanging in tight. You had a Bible gap up here, and it's just kind of holding above it. So yeah, it's acting okay. But this market is just like a little of this, a little of that, and you get some big jacks in stocks once in a while, and they look good for a little bit, and then they all come back in. So again, if you got your buy watch list, you watch for pullbacks in the areas of support. So, and I went over some potential short sale setups, and the things I'm looking for in names like CRM and Apple and Facebook and others as potential breakdowns, and that may confirm that we're going to at least correct a little bit more than we have, say, over the past couple 3 months. So so just play it slow and be opportunistic, but also don't be afraid to take a shot, but also keep your sell points very tight. I think that's very key right here. And if I had any single message to give you right here at this juncture in time, it would be to keep your stops tight on anything that you enter. So keep your entries tight, your stops tight as a result of tight entries, coming in at areas where you have a clear point of support that you're going to be driven out of the stock right away if it doesn't work. Okay, and basically that's all I've got. So on that note, you got anything else, Dr. K?
We're good over here.
Okay, we're waiting for a big storm to hit. It's just starting to get here. Supposedly we're getting 3 to 5 inches of rain, which in LA, I think we haven't seen this kind of rain in a long time. So I've got my canoe out, and I'm hoping to paddle down the street later on, but we'll see what happens. So anyways, you guys, have a great weekend. Thanks for showing up. And, you know, keep your head and be shrewd. Be shrewd and fearless. So we'll catch you next time. Take care.
So long, everyone.